This week's Market in a Minute update is all about the rebound in mortgage rates and interest rates. As you'll remember, last Friday, the tariff wars, as it were, really kicked off in earnest as President Trump levied his first wave of tariffs on the rest of the world. Interest rates dropped quickly and hard as people's fear of potentially recession drove a flight to safety and dropped interest rates accordingly. We are now realizing that there is more going on here than just potential recession. Additional tariffs are actually slowing down trade and slowing down the revenue that we expect to get from those tariffs. Greater debts means much larger issuances of debt by the treasury, and yields are going up as we continue to have to finance those yields. I'm going to try tomorrow to talk about the correlation between treasuries and interest rates. But in the meantime, know this: tariffs are here. Tariffs are hurting. Tariffs are not producing what they're supposed to. And one of the offsets of that is going to be higher interest rates because we have to finance this new debt. Anyway, rates are up 10 basis points from last week. The average 30-year mortgage right now is 6.85%. 30-year fixed with 20% down, good credit. We're seeing 6.375%. That's your Market in a Minute update.